Excuse me, but what's going on? Thank you for joining us for the latest round of the Terra Luna Classic price update. The charts I analyzed yielded some extremely fascinating insights that I feel compelled to share with you in this video. Make sure to give the video a like, subscribe, and enable push notifications in order for you to retain all of this data. And now, onto the main course. Okay, first I'll get rid of these Elliott waves because we don't need them any longer. In addition, I'm going to do rid of this Fibonacci extension right now. It's not like we need this anymore. To begin, let's think about the symmetrical triangle we solved earlier. Observing just one chart, we can see that we were building a symmetrical triangle. It was crystal clear. Let me focus in on the hourly chart for a moment. So, what do we see? Remember when I talked about how crucial the area between 0.29874 and 0.31649 is? The heavy rejection we experienced is evident, as is the symmetrical triangle we formed before it. For warning of the symmetrical triangle and the possible breakdown to the downside is really what I'm after. Join the Telegram immediately. There's a note about that in the description. There's no charge at all. Since that is the case, you have nothing to lose by trying. Have a look. Amazing, really. I'm giving you live updates on the status of Luna Classic and other cryptocurrencies like Bitcoin. Exactly what's going on here. You should definitely take a look. Let's keep going with the technical analysis, after all, because it's worth it. As expected, there was a break to the downside with higher volume and then a retest right there at our target price of 0.3443. Following a day of consolidation within a key support and resistance range, the market has dropped sharply in the previous few hours. Here, too, we can see how crucial this resistance ultimately proves to be. The difficulty of regaining this level is high. As I said in the Telegraph, a bearish candlestick pattern called an evening star can be seen clearly on this chart. This is the first evidence of weakness we've seen, and I warned in my Telegram that we should take a negative stance. As predicted, things took a turn for the worst. The Fibonacci retracement from 0.39372 to 0.2324016 is a key finding of mine. This final effort to get away from the top towards the bottom is what it amounts to. And just what do we perceive before our very eyes? We can clearly observe that the rejection occurred precisely at the 618 Fibonacci level. Okay, I'll make the necessary adjustments to the color scheme of my standard template for your convenience. That settles it. At 0.33506 at the 618, we see a perfect rejection. Let me zoom in on a narrower window of time to demonstrate just how spot on our estimate was. Our heads are just above water at this point. That was a major hint of weakness 2 days ago. Something we should have seen coming. Fibonacci and the EMA ribbon both seem to function quite well with Luna Classic. My advice is to incorporate Fibonacci numbers into your study as often as possible because they are crucial to our conventional approach. I've found that the number 618 correlates highly with people's reactions on the Luna Classic, whereas other coins perform better with other numbers or words. Let me first remove this so we can see the other stuff more plainly. Here, on the one-day chart, we can see the beginnings of a bear flag emerging. After completing the break of our symmetrical triangle to the downside, we immediately emerged. Bearish indications are plentiful on the Luna Classic chart at the moment, so I'm not anticipating any kind of price increase in the near future. Right now, our first priority is to retake this vital buffer zone. The stakes at this stage have not changed. And now, let's check out the EMA ribbon. And sure enough, there it is, right at the 0618, which happens to be the same spot on the EMA ribbon where we were initially rejected. A major convergence point at the 0.618 Fibonacci retracement level, from which any ascent would be quite challenging. As I've already mentioned, at the moment, I anticipate a dump rather than a pump. A resounding no up to the 6.8. Therefore, a buffer zone to the downside should be anticipated. On the 1-hour chart, we can see that the EMA ribbon has been retested several times. And now, right here on the EMA ribbon, we have retested both the ribbon and the pattern at the same time. In other words, a flood of massive bearish gatherings. The 618 Fibonacci level on the EMA ribbon saw 2 significant bearish retests. A bear flag was also broken to the downside at this time. and this pattern fits the description. The level that I'm keeping a close eye on is currently not looking as promising as we would like if we do continue to fall. I expect that this support area will be the lowest. Sadly, this is the only level below where you can go. If we do manage to plunge below it, it will be a huge negative movement. So, tell me, where does all this encouragement come from? Now that we have a chance to look back, we can see that it was founded on the highs of both June 29 and May 30. Therefore, 0.16351 is a crucial threshold to monitor, right? In the event that we were to suddenly lose our current source of help. Also, we're remaining inside the EMA ribbon at the top of the daily chart. But now I'll demonstrate something to you. We have the makings of an evening star on the one-day chart. If you recall, I was just showing you the evening star on the hourly chart and telling you how bearish it is. Presently, this pattern may be seen on the one-day chart. Even more so, if this scenario plays out and the daily candle closes at this level, it will be a sign of weakness. An evening star is now verified, and it's entirely possible that we'll now break this support level. The next thing to watch for is whether or not the following day's candle closes below the EMA ribbon. In such circumstance, the Fortuna Classic can be considered complete. Additionally, a great deal more horizontal consolidation is to be anticipated prior to any serious upward movement. To that end, if a daily candle closes below the EMA ribbon, we should expect a new period of accumulation to begin. This concludes our revision of a Luna staple. Check out the link if you're interested in a Luna Classic guide trade. Henceforth, we will be working together as an official alliance. First of all, you earn a whopping 10% off trading fees if you click the link in the description. If you trade frequently, the 10% discount amounts to a significant savings. Plus, if you use my referral link, you can earn a bonus of up to $9,100 USD. To start trading, you must first open an account, fund it, and then engage in transactions. After that, you'll be eligible for the bonus, right? This means deposits and trading are required. Crucial in every way. I've felt the need to elaborate on that. Take a look at this site if you're interested. Your use of the link will help fund the channel. Therefore, everyone benefits. You're helping the channel out, saving some cash, and possibly even getting some cash for nothing. You guys are the best for tuning in. As for the rest of this Lunar Classic pricing report, I'll see you in the following clip. Goodbye.